Yes, students, wishing you all the best for your upcoming exams. You are welcome to see your short questions with Narayan. In today's episode, we will be covering about economics part 2, which is in the syllabus of BCOM and BA LLB students. And also, these are important for CUET aspirants for commerce, for central universities and MCOM students, also for CTBT income tax competitive exams. So let's start from question number 1. What is macroeconomics? Macroeconomics is the branch of economics that studies the behavior and performance of an economy as a whole, focusing on aggregate variables like GDP, unemployment, and inflation. These are the points you must keep in your mind while faring in the exam. Second question, define stock and flow variable with one example. A stock is a quantity measured at a specific point of time. Example is wealth. You can cite an example like Ambani's own wealth of 200 billion. A flow is measured over a period of time. Example is income. Julie earns 12 lakhs rupees per annum. This is an example of flow. What is the main goal of classical economics? Classical economics aims for full employment and believes in the self-regulating nature of markets through flexible prices and wages. What is the meaning of aggregate demand? Aggregate demand is the total demand for all goods and services in an economy at a given overall price level and in a given time period. These are the keywords: the total demand for all goods and services, and the second point you must remember is at a given overall price at a given time period. Moving to the next question. Name any two macroeconomic goals. First is economic growth. Second is price stability. They are sure short questions that will fetch you good marks. What is real GNP? Real GNP, that is gross national product, is the total value of all final goods and services produced by the residents of a country in a given period adjusted for inflation. Final goods and services. It reflects the actual quantity of goods and services produced, eliminating the effect of changes in the price levels. The real GNP formula is nominal GLP divided by GNP deflator multiplied by 100. Define circular flow of income. Circular flow of income refers to the continuous movement of money, goods and services between producers and consumers in an economy. Example is, households provide labor to a factory. The factory pays 10,000 in wages. Households use this 10,000 to buy clothes made by the factory. The factory earns 10,000 from sales and again pays it as wages to the people. Define money. Money is anything that is generally accepted as a medium of exchange, a store of value, a unit of account, and a standard of deferred payments. You can also write it is a mode of tender of exchange. State any two primary functions of money. Medium of exchange, it acts as a medium of exchange. Also, it is a measure of a value. What is monetary policy? Who makes it? Monetary policy refers to the process by which a country's central bank controls the money supply, interest rates, and credit availability in the economy to achieve specific macroeconomic objectives such as controlling inflation, promoting economic growth, ensuring price stability, maintaining exchange rate stability, encouraging employment. In India, the central bank is Reserve Bank of India. So RBI makes monetary policy in India, which is the answer to the second part of this question. What is the difference between inflation and deflation? Inflation is a sustained rise in price levels, while deflation is a continuous fall in the general price level of goods and services. Mention two components of money supply. One is currency held by the public, जो लोगों के पास पैसा रहता है हाथ में, and demand deposits in banks. These two make together money supply. They are the components of money supply. What is the role of the central bank in credit control? The central bank controls credit by regulating money supply and interest rates using tools like CRR, SLR, and open market operations. The central bank in India is RBI. Give one key distinction between commercial bank and NBFIs. NBFI stands for non-banking financial institutions. Commercial banks accept demand deposits and create credit, whereas NBFIs do not accept demand deposits. This is the main difference. You must remember, NBFIs are not authorized to accept demand deposits. Three major non-banking financial institutions in India. The question could be name any three major NBFIs. One is Life Insurance Corporation of India, in short LIC. It provides insurance services and loans to the government and individuals. NABARD. NABARD stands for National Bank for Agriculture and Rural Development. It promotes and finances agriculture and rural development projects. SIDBI. SIDBI is Small Industries and Development Bank of India. It supports small and medium enterprises through loans and refinancing. These NBFIs play a crucial role in supplementing the traditional banking system by catering to the financial needs and sectors. What is public finance? Public finance is the study of government income, that is revenue and expenditure, and how these affect the economy. It includes taxation, government spending, budgeting, and debt management. Define a tax with example. A tax is a compulsory financial charge imposed by the government on individuals or businesses to fund public expenditures without any direct return. Example is income tax, corporate tax, and wealth tax. These three are direct tax. Indirect tax is GST, customs duty, excise duty, and stamp duty. State two major sources of public revenue. One is tax revenue, that is income tax or GST. Second is non-tax revenue, that is fees, fines, profits from public enterprises. आप सोचे होंगे ये कैसा है, आप बिना हेलमेट के जब ट्रैवल करते हैं आपका पुलिस फाइन करता है. It is one kind of non-tax revenue for the government. What are direct taxes? Given one example. Direct taxes are imposed directly on income or wealth and are paid by the person on whom it is levied. The best example is income tax. Give one key difference between public finance and private finance. Public finance deals with government income and spending for social welfare. Example, collection of taxes, income tax, GST and custom duty. Public expenditure, spending on education, defense roads, welfare schemes like Manrega. ये जो flyover बनता है, that is also public expenditure, and government uses the tax collected from the taxpayers for these welfare purposes. Private finance deals with individuals or companies' financial decisions for personal gain. Example is household budgeting, planning monthly expenses and savings. घर में कितना पैसा आएगा, कितना खर्च होगा, कितना सेव करेंगे, all these things. Personal loans or credit card use, borrowing from banks for personal use, they all are examples of private finance. What is the benefit principle of taxation? The benefit principle states that individuals should pay taxes in proportion to the benefits they receive from public services. That is, whatever payment you are getting, you must pay tax to the government for the benefit of the people. Mention two types of indirect taxes. Always remember, one is GST, second is customs duty. What is fiscal policy? Who makes it? Fiscal policy refers to the use of government revenue and expenditure to influence the economy. In India, the fiscal policy is made and implemented by Ministry of Finance, Government of India. Name two objectives of fiscal policy. The first objective is economic stability, second is full employment. What is central budget? The central budget is the annual financial statement showing estimated receipt and expenditure of the central government, here the union government. Define budget deficit. When total government expenditure exceeds total revenue, remember it is excluding borrowings. Including borrowings means that will be revenue deficit. So it is budget deficit is when total government expenditure exceeds total revenue. You must write within the bracket excluding borrowings. It is called a budget deficit. Budget deficit comes when the government expenditure GE is greater than TR. TR is total revenue excluding borrowings. Name any two instruments of fiscal policy. One is taxation and public expenditure. What is revenue deficit? It is the excess of revenue expenditure over revenue receipt. Revenue deficit is equal to revenue expenditure minus revenue receipts. You can, in short, you can remember RD is equal to RE minus RR. What is public debt? Public debt is the money borrowed by the government to meet its expenditure requirements. Examples, government bonds issued by the central government to borrow money from the public. Second is treasury bills, T-bills. They are different depending on the number of days allotted. They are named in different days. So one example is 364 days T-bills. T-bills is treasury bills. And the government public debt also is if India is taking loan from the World Bank for projects, that is also a public debt. Short answer type questions. Discuss the goal and principles of classical economy. The main goal of classical economics is to achieve full employment and deficit allocation. These are the points you must remember. To achieve full employment and efficient allocation of resources through self-regulating mechanism of free markets without the need for government intervention. The principles of this economics is full employment. The economy always tends towards full employment in the long run as market adjusts through flexible wages and prices. Second principle is Say's law. Say's law says supply creates its own demand, meaning that production of goods will generate enough income to purchase all those goods. Laissez-faire approach. This says government should interfere as little as possible. The market, if let free, will correct itself. Price and wage flexibility. Price and wages are flexible and adjust to bring the economy to equilibrium. Explain any three key difference between public and private finance. This is a repetition of questions, but tabular form writing gives good impression to the evaluator. The first feature is objective. Public finance is for social welfare, private finance is for personal or business profit. Budget may have deficit or deficit financing. In the case of private finance, it should ideally be balanced. Compulsion. Revenues from taxes, it is compulsory. Income is voluntary, that is salary. Transparency. Public and audited. Public finance is auditable. प्राइवेट फाइनेंस इज कॉन्फिडेंशियल. आपके पास कितना पैसा है, आप कैसे खर्च करते हो, मेरा क्या मतलब. गॉट इट. ट्रांसपेरेंसी. Then comes flexibility, limited due to social obligation, but it is highly flexible in the case of private finance. Example is public finance. A government may run a fiscal deficit to fund welfare schemes. An individual cannot do so easily without going into debt. Government may use the other resources to meet its requirement, but individual have to borrow from others. Explain the classification of taxes with the example and equations where relevant. Classification of base taxes are mainly direct tax. It is levied on income or wealth. The burden is on the taxpayer. Example is income tax, property tax. Indirect taxes I have already told you: GST, excise duty, customs duty. They are levied on goods and services. The burden can be shifted. Explain the interdependence between microeconomics and macroeconomics. Microeconomics studies the behavior of individual units such as consumers, firms and industries. Microeconomics studies the economy as a whole, including total output, national income, employment, inflation. Though they study different levels, micro and macroeconomics are deeply interdependent, as individual behavior aggregates to determine macro level outcomes and macro policies affect individual decisions. Example, if RBI raises interest rate to control inflation, it increases borrowing cost for individuals and firms, reducing personal value consumption and business investment. That means the micro has an effect on the macro and macro has an effect on the micro. See how through this diagram you can understand. Microeconomics comes under consumers, firms and workers. When they are aggregated into micro data, then it comes to demand. Consumers have a demand, firms has a function of supplying, and workers, they give outputs, so as there is an overall effect on the prices of goods. How micro level effects, when the taxes, interest and inflations are increased or decreased, it affects the spending capacity, saving and hiring of the consumers. Describe the goals of macroeconomic policy. First goal is full employment. To ensure that all people who are willing and able to work can find employment, high employment levels increase income, production and economic stability. A government launching job guarantee schemes during a recession to reduce unemployment. Price stability. To maintain stable prices and control inflation or deflation, using monetary policy tools like repo rate adjustments to control inflation. Third is economic growth. To achieve a sustained increase in national income and output. Example, investing in infrastructure and education to enhance productivity and production. Balance of payment. To maintain a stable and manageable difference between countries' exports and imports. Example is promoting exports and controlling imports through trade policies will generate more revenue for more foreign exchange for the country. Distinguish between nominal GNP and real GNP. Nominal GNP measures the value of goods and services at current market price. Remember this, value of goods and services for the current market price, including effects of inflation, whereas real GNP adjusts for inflation and measures the actual volume of production. A, it considers the inflation. Real GNP considers the inflation and nominal GLP does not. So real GNP is a better indicator of economic growth rather than nominal GNP. Describe the difference between money market and capital market. Maturity period of money market instruments are always less than 1 year. Capital market, it is more than 1 year. Instruments are treasury bills, call money in money market, and capital market is share and debentures and bonds. Risk is very low in money market. It is quite high in capital market. Institutions controlling these things are RBI, commercial banks. In the case of capital market, it is SEBI, stock exchanges. Objective is liquidity and working capital, and capital market is long term objective for investment. Example is buying a treasury bill is money market, and buying a share of particular company like Reliance Industries is an example of capital market instrument. State the functions of a commercial banks with example. One is accepting deposit, savings or fixed deposit, granting loans, homes or business loan, credit creation, lending more than deposits through fractional reserves. एजेंसी सर्विसेज लाइक पेइंग यूटिलिटी बिल्स और इंश्योरेंस प्रीमियम्स. आप कभी कभी आधार कार्ड में कुछ चेंज करना होगा तो यू गो टू ए बैंक, दैट इज agency services. Other functions are ATM services, foreign exchange dealing. A bank gives 1 lakh loan based on 10,000 reserve ratio, multiplying money in circulation. Explain the classification of taxes with examples and equations. I have already, this is discussed. You please refer to the previous question, direct, indirect tax and the types. Explain any two main objective of fiscal policy. One is economic growth, second is reduction in income inequalities. This is also discussed previously. Please refer to that. What are NBFCs? Non-banking financial companies are financial institutions that provide bank-like services such as loans, credit facilities, investment services, and asset financing, but do not have a banking license. They are registered under the Companies Act of 2013 and regulated by the RBI Act of 1934. What are their roles in economic development? One is credit access to underserved areas. NBFCs reach rural and semi-urban areas where traditional banks are less active. Example, microfinances, NBFCs lending to self-help groups. Support to small and medium enterprises. They provide crucial working capital and equipment finance. Example is lending to small manufacturing units and traders. Infrastructure financing. Some NBFCs specialize in funding roads, power and telecom infrastructure. Example is infrastructure finance companies, IFCs. Promoting financial inclusion. They offer loans, insurance and investment opportunities to people outside the formal banking system. Employment generation. By supporting startups, SMEs and micro enterprises, they contribute to job creation. Capital market development. Investment NBFCs channel funds into stock market and mutual funds and they develop their own capital. Types of NBFCs. Asset finance company AFC. They provide finance for purchase of physical assets like vehicles or machinery. Investment company IC deals in securities like shares, bonds and mutual funds. Loan company LC provides personal loans, business loans. Infrastructure finance company IFC specialization in infrastructure project financing. Microfinance institutions provide small loans, that is less than 1 lakh, to poor households. Housing finance company offers home loans and real estate financing. NBFC factor specializes in factoring services like management of receivables and payables. What is poverty? This is the last question of this episode, and let's close it after this question. What is poverty? What are its causes and suggest measures to prevent it? Poverty is a condition in which an individual or a group lacks the financial resources and essentials to enjoy a minimum standard of living. It means inability to afford basic necessities such as food, shelter, clothing, education, and healthcare. According to the World Bank, extreme poverty is defined as living on less than 2.15 US dollar per day. This calculation is as of 2022. Causes. Unemployment is the first cause. Lack of job opportunities lead to low income and poverty. Low education level. Poor education restricts access to skilled jobs and higher income. Population growth. High population puts pressure on limited resources and services, and the India is now at the top of the population. Inequality. Unequal distribution of income and wealth increases poverty gaps. Poor infrastructure. Lack of roads, electricity, and irrigation affects rural livelihoods. Corruption and poor governance. Misuse of public funds and inefficient policies can worsen poverty. Agriculture dependence. Many poor people rely on seasonal, low paying agriculture work. Natural disasters and climate change, they also cause catastrophes destroying livelihoods. Measures to prevent or reduce poverty. Employment generation. Launching schemes like Manrega for rural job creation, education and skill development. If this is done, then people will get skilled. Access to health and nutrition. Strengthening healthcare and public nutrition programs like ICDS and midday meal scheme. ICDS stands for Integrated Child Development Scheme. Inclusive growth policy, focusing on both economic growth and equitable distribution of income. Microfinance and credit access, encouraging self-employment and entrepreneurship among the poor. Social security schemes, we popularly call it as triple S, providing pensions, insurance and subsidies to vulnerable groups. Women empowerment, promoting women's education, employment and financial independence. Affordable housing and sanitation schemes like PMAY, Pradhan Mantri Awas Yojana, Swachh Bharat Abhiyan, they are the measures for to provide affordable housing and sanitation to people all over the country.